and get above that 89 print. Nope, still selling right off that 89 again, guys. Well, that was a nice call for 89, wasn't it? We didn't get very far, but we still got down to 87s. So let's see if we can improve on that position a little bit. Nope, broken the 89s now. That's us. Good. I thought we would have seen buyers this morning because remember I talked about the fact that we'd got above the big hedge level. I thought they would probably start buying it at some stage. That's what we said this morning. And I've been very, very surprised if we couldn't take that price out. We have managed to take the price out now, so that's good news. Good. Okay, so what we were talking about this morning was that, bearing in mind that it was in the overnight session that we went above the, it was in the overnight session that we managed to go above the flip level from last night. We gave you the flip level yesterday. And obviously we went above that in the overnight session. So that means that no US stocks had managed to basically flip at that time of night because there's no volumes. You can obviously do dark pool volumes, of course. There's no issue with that. But for the vast majority of it, that's going to be an open play. So what's going to have it happen is that the dealers coming into desk today are potentially in a very, very dangerous losing position, aren't they? The dealers are in a losing position. How do we know that? Because the dealers were short below the flip. So obviously when the price gaps past the flip, the dealer's short position is actually losing the money. So the first thing the dealers would want to do is try and push the price down as much as they could to try and get off of their losing position this morning. But obviously that puts them into difficulty because obviously they could only get it so far and the buyer started to buy from them. So the dealers probably had to join back in with the buy side, and that's caused the market to just pop back up again from the cash open again. And that's exactly what we've seen. Right from the gun, we've seen the buyers come straight back in, and we've managed to catch a nice bid back away from those opening plays. Now, a lot of people will look at that and see it. You'll be able to recognize it quite clearly from the cash open itself. You can see how it played out because this is what the chart looks like right here. So you can see they tested this 89, tested this 89, tested this 89. The price dropped. The dealers would have been happy. But as soon as the price turned back against that, the dealers were finished, weren't they? Double distribution down, commercial buy zone. Commercial buy zone becomes a buy on the retest right here, doesn't it? Is that what we did this morning, guys? Yes or no? Is that exactly what we did this morning? Yes, it was. Okay, so you can now recognize where the commercial buyer comes in at 89s, and we've just managed to rattle the price up to 98s, 9 points, $450 profit by recognizing the flip round from this price to this price. Absolutely spot on, perfect. For anybody that's just in this morning, we covered this actual subject this morning in Classroom, which is why I'm making mention of it, because we actually did cover this subject in Classroom this morning. Now, the challenge on the bond has turned out to be true. The knob spread has steepened again, and that's obviously giving us a problem with the DV01 rebalancing question. We'd love to be buying bonds. That seems to be the definite trade at the moment. It doesn't matter how often and how much we squeeze the chart in. That divergence is now very, very visible. So we're now waiting for these short-term divergences to keep in play just now for this bottom edge bond. So I do like the buy on the bonds at the moment. It's still the trade that I fancy. So we're buying the pullbacks. We're buying whatever we can get our grubby mitts on just now. And yeah, it's just went back up again. I managed to pick up some ultras at 5s and 6s. And it's just rallied back up to 11s again. And I'm just going to be thinking about taking a bit of profit at 12. Some heavy liquidity sitting on the book, so if that pulls away, we might just be able to make a break through the 12s. Starting to pull away now, so that's good news. So we should be able to break through the 12s. It's now gone up to the liquidity shifted up there to 14s. They've put it back on again. Okay, I'm going to just take a little bit of money off the 12s at the moment. 11s, sorry, I'm taking a little bit of money off the 11s to front run that 12 seller. You'll see where oil stopped. Quite an interesting price, is it not? Everybody see why it's quite an interesting price? Yeah, I'm sure you do. If you look at 17 hours ago, you'll see that the oil RGL is 77.35 to 50. 77.35 to 50. So where did the oil price stop? There's the 77.35 to 50 zone just there. Do you see it? So you're already aware that that's where the oil would most likely stop, having had such a big upside pop from our buy trade this morning at 75 evens. You can see we just popped into the 77.27s. So we're only a few ticks away from that actual top edge there, aren't we? Crazy. So you can see exactly what was going on in this area here. Perfect. Let's take a look at the commodity risk at the moment. You can see that we should be able to make a play on this. So I'd like to be a buyer on the pullback. I'd like to take that business on. The euro dollar obviously is also giving us some interesting ideas on a short term. We had caught a nice bid. This little offer that's came in has obviously just stalled the oil for the time being. I think if the dollar catches a bid again off these low prints, we could probably quite look forward to oil prices making an attempt at 77, but it's already gone a big swing, guys. We went sell side at the London Open for $2,000, and we went buy side at the London Open for another $2,000. I only got the buy side of the oil, so I'm obviously, I only got half of the trade, but still half of the trade more than most people. So because the London session's done $2,000, it's probable that the US session will be a little bit more churny. So just remember that when you're looking at the markets, a low volatility US session on oil is probably on the cards. Does everybody remember that concept? The bigger the London session, the more rotational the US session is likely to be. So, it's still got a lot of range because of the volatility in oil, but I don't see it extending much beyond the 2000. Of course it can, but unless we see some value changes, I think the 2000 range is going to be now tight on the price, unless we get a paradigm shift in the markets. As far as what the Chinese are doing just now, the Chinese were big buyers of the London 75 oil, and the Chinese were sellers of the US Open, $77 plus. So the Chinese were buyers of the $75 oil. That gave us an opportunity to join in, and the Chinese were sellers of the 2 o'clock open. And that gave you the opportunity to sell into that RGL top edge. Yes? Everybody got that? All the oil boys